All right, what's going on, everybody? It's Friday. We made it. Don't tell anybody, though. I think it's a secret. It just kind of feels like it. We got a good topic today, one that I always love to get into because I remember the struggle. The struggle is real, right? Trying to get swing trade setups and how frustrated I was with the way that the books present things. So one that I always like is this really great book that I'm going to share with you guys today. It's called Hit and Run Trading, the Short Term Trader's Bible, redone. So it's like a part two, but really they just like cleaned it up a little and added some detail to the original. And connected to it is a website called Swing Trade Bot. And we're going to come back to that in a little bit. But you can go check it out early if you want to, right? Swingtradebot.com. And I get it. It looks cheesy. You know what I mean? Like you go to websites and you're just like, man, I don't know. That's kind of cheesy. It feels that way. It's almost like barcharts.com if you've ever been over there. Their site always has that kind of cheesy feel to it too. Really great tools on both sites, but it just makes you feel like maybe you went in the wrong place and you're not where you're supposed to be. But swing trade bot. All right. So the request was to have a conversation about swing trades and their setups. Right. Let me find the spot. I thought I had it wrote down, but that that pretty much sums up what the request is. And the trouble is, if you go through the books and candle analysis and technical analysis, they always talk about things like breakouts on elevated volume or big reversal bars, these really beautiful, crystal clear signals to go long. And sure, you do find those, you do. But I got to say, when it comes to those kind of setups, I don't try to find those. The reason I don't try to find them is because if you go to social media, every Joe Schmo and their brother is going to be telling you about Amazon breaking out into new highs or Microsoft breaking out into new highs. You know, like if it's so crystal clear, obvious the way that the textbooks give it to you, you don't have to look for it because everybody is going to be telling you, hey, look, it's breaking out. Okay, that's great. All we got to do is hang out on social media, right? I don't really want to hang out on social media, but that's one way to go. And it doesn't even require you to put any work into it. But I don't like that. You know, I want something that I can do on my own. So when I was studying this, one of the things that I kept coming across was this book called Hit and Run Trading. Now I have shared it in the Discord before if you was to search for it, but I'm just going to post it again and then I know you guys have it. There's two books that I like when it comes to this sort of conversation. One is a book by Gerald Appel. If you guys don't know the name, he's the one who was mostly attributed to the development of the MACD, right? So the guy, if you just think about how common the MACD is, the guy's been around, right? His book is called Technical Analysis. That's simple enough. So I'm posting that in the chat right now. Technical Analysis by Gerald Appel. And I like this book because it talks about mutual funds, ETFs, and stocks in a portfolio that you're holding over a long period of time, and when you should add to those portfolios, when you should consider reducing your position size. And it talks about things like the Fed, the FOMC, looking around at treasuries and bonds. and kind of making sure that you're in the right market backdrop to even be shopping for long trades or not, right? And if you are, then in what space? Growth, value. So it's a really good book, right? And he did really good in the writing. It was easy to read. I didn't feel like I was doing chores trying to work my way through it. So it's an older book. I'm sure there's something more modern and popular, but it's free. It's well written, and it gets the job done. So there's that book. The other book is Hit and Run Trading. Now, you don't have time to read it before we can start talking about it, but we're going to start looking at some of the trade setups that are in that book. And it's really simple to see what those trade setups are because we're going to come over and look at this website, Swing Trade Bot. I'm not logged in. I no longer have an account here, although I did have one for a year. And without being logged in at all, we can look at things. So we can just come up and check the end of day scans, and we want to see all scans, right? So when I do that, what the guy did, his name is Michael. He read the book and he said, "Oh, this is really awesome. This is fantastic stuff. I'm going to build all of the things that are in that book. I'm going to build a scanner for it, for every single one of them. And each setup has a name. So we can come in and we can see the lizard bearish setup. I don't know about you, but I don't know what the hell that is. I mean, no, really, I do know because I've read the book. But if you've never read the book, you don't know what that is, right? Like, what the heck is this? What is a lizard bearish setup? Well, we can just click the outcome, and here are the rules. They are very specific rules, right? Giving you everything that you need to know to find that trade and then where to put your stop once you get in the trade. Now, this is just one trade called the lizard bearish trade. And if you didn't catch it from the name, it's a short trade, right? It's not a long trade. I think there's a lizard bullish trade. I think. I don't know what we could scan down and look. But if you're looking for rules to take a trade and different setups for them, there you go. And the book is full of this, right? Now, the difference between the website and the book is that the book tells the story about how the author got these rules, the things that he considered, the work that he put into it, and finally the output that you see here. Any changes that he made along the way, right? It's a little bit of a journey. It's a book. So without the book, you just have the rules and you don't really know why these particular rules are the way they are. So I really encourage you to read the book. Sure, you could just go to the website. It doesn't cost you anything to see this. You could use it. You can copy all of them down and rebuild them in Thinkorswim if you want to. That's what I did. And never read the book at all. But you won't have the depth and the background behind the trades if you don't read the book. And I don't know about you, but I like to learn. So I really enjoyed reading the book. This website has the best trade setups when it comes to depth and background and rules and criteria of any place that I've ever come across for free. For free. I mean, you can't beat free. I've found paid websites that don't offer this much value and detail, right? They want hundreds of dollars or thousands of dollars, and they don't give you even a lick of this. So there you go. Can't beat it, right? At least I've never found anything that does better than this. Now, don't get me wrong, I was glad to have found this. And for a while, I used it. I don't use it to take trades very much anymore. And it's not because there's something wrong with it. I just don't trade this way. But I do use the things that I learned in this to help me better understand price. So I analyze price using these concepts. So that for an example, if we had the the setup for the lizard bearish or the slingshot bearish. Let's look at that one. If we have that set up, then it's telling me that the market's going to go down, right? Because it's a bearish setup. I don't necessarily need to trade it the exact same way that they're telling me to trade it here. I can just use this and say, hey, this stock, right? ABC company has a slingshot bearish setup. That looks like it's going to go down. Now I've got some trade ideas. Maybe I trade it. Maybe I look at what sector it's in and what industry it's in, and perhaps find a better company that's matching that one that has better options, and I trade that thing instead, right? But it would point me in the direction of a downside trade because it's a downside setup. So when I say that I don't trade these, don't mistake that to mean that they're not any good. They are good. They're great. I just don't trade this way. So I don't use them. But they're perfect for analysis even if you don't want to use them. So this website is called Swing Trade Bot. You don't need to pay anything. You don't have to buy it. If you did buy it, then you can adjust how it scans. You can mix and match different scans together, and you can customize the watch list, use elimination criteria to define what stocks are too cheap or what stocks are too expensive. So you can really customize it if you had a paid account. But even for the free account, you can see what every one of the trades are, what every piece of criteria is, and it doesn't cost you anything. So that's fantastic, right? That connects to the book, Hit and Run Trading, the Short Term Stock Trader's Bible. And I posted that in the chat. So now you have both. So that was easy, right? We got that done in like 10 minutes. But I don't trade that way. So when it comes to the idea that I don't trade that way, well, then what the heck do I do? Yeah, and here let me put that website in the chat, even though I said it. Um, we'll just put it in there as a link so people can click it. You like it. All right, now me, I like to do things like mechanical options trades. If it's not a mechanical options trade, I like to do things that have a macro backdrop if it's possible. So I'll use thematics, mean reversion, continuation trades, technical analysis against the indicators like moving averages, Bollinger Bands, and Keltner channels. I like to tie all of this together. It's not like I just do a thematic all by itself, or I don't look at mean reversion just by itself. I try to tie all of this together. So if shipping is hot, that's my thematic. Then I would try to tie that into, has it run too far too fast yet? And are we looking for mean reversion trades? If we're not, then I'm still running in continuation trades with thematics, right? And we'd be balancing that against the macro backdrop of why is that sector hot? Or when are we expecting that sector to dry up and not be hot so we can run the reversal and short that stuff? To me, this has always fit me better because the scanner finding some random Joe Schmo name that maybe I've never heard of doesn't really interest me. Once I find it on that scanner, I then have to go hunting. Why is it up? Why is it down? Why is it moving? Who is it? What do they do? What do they make? When's their earnings? How was their earnings? When's their dividend? Oh my goodness, it's a lot of work. If I focus on companies that I already know and I already understand and they have good options, they've got good liquidity, then I've got a small pool to trade from and I understand those companies. Now, when you're new, you probably don't know very many companies. And as a swing trader, that's where you're likely to spend a lot of your time. At least I would like to think so. We all want to learn about moving averages and Bollinger Bands and whatever, but you got to kind of know the companies that you're trading. At least if you're doing more than just day trading. Because if you're just getting in today and you're getting out next Friday, who cares, right? Like it really doesn't matter. But if you're going to be in it for 6 weeks, 2 months, you probably want to know what the heck it is that they do because you got to be able to identify the risk. So the easy ones, of course, Apple, Microsoft, Google, Amazon. That's not much of a surprise. There are thousands of stocks out there. And if we add ETFs into it, then the list gets even bigger. And if we add commodities to it, the list again gets even bigger. I don't want to trade anything, right? Quantity isn't the issue, quality is. So for me, I really want to start everything that I do with that quality. So I'm just going to reset this. And we've done this part before, but it's always good because you never know. We might have people in here that didn't see it last time. I just get rid of all the filters. So I have no filters. I am an options trader, but I don't always use options in my trades. But options are a really good way to identify if something is liquid, right? So liquidity has a lot of definitions. If a company has options but not weekly, it is not liquid. We're done. Just walk away. Even if it has weeklies, it may not be, quote, liquid, but it has enough liquidity that it earned that weekly status, weekly options. This used to be my go to. That's what I used all the time. But Thinkorswim also has something called penny increment watch list. So if you didn't know, not all options trade at penny prices. Some of them move in nickels and some move in dimes. If you set your scan to find penny increment options, you'll see that there's 382 things that have penny increment options. So if you plan on using options, if options are a big part of what you're going to do, you want that liquidity and you want the cheapest options you can get. If you've got to split the bid between 5 pennies, then you're going to slip to get in, slip to get out, and you're just handicapping your trade. So this is the best that you could get when it comes to developing a watch list and having tradable options. Start with penny increments. Now you can narrow the field by making sure that they're US companies only, no ADRs, for an example, no Canadian companies, anything like that. You could also eliminate any ETFs and make sure that they actually are companies. So if we exclude ETFs, I think it's down here, all ETFs. So now we're excluding ETFs. That should knock it down like another 30, I think. Oh, wow, 70, even better. So now you got 310 companies that have penny increment options. But we don't know if they necessarily have weeklies. It's almost a given that they do, but let's look. Why not? That way we don't assume. Aha, there we go. We knocked it down another 50 stocks. So now we've got 267 companies that have weekly options and penny increment option prices and no ETFs. This would be the basket of stocks that you would want to use, or at least that I use, to define an options trade or to even begin hunting for a trade, I would want to find it within this list. So from there, let's save this. You would want to adjust it by stock price, right? If you don't want something that's too cheap. And in fact, let's go ahead and add that filter for myself here because I don't want to trade something if it's too cheap. $5 is going to be my minimum value. And I don't really have a max value because of options. So I don't care if the shares are $100,000 because, options. So no max, just the minimum. This will help avoid the situation where you find a stock and it's $3, right? The $3 doesn't really leave you much room in the option space to do anything. Eh, There are good things to trade down there, though, right? So don't get me wrong. Just because I'm putting a $5 minimum doesn't mean that you shouldn't trade something that's $4.50. We're just talking, in fact, let's see what happens. 268 is the number, and it went to 251. So we knocked off another 17 stocks that were less than $5. Maybe we'll miss them when they're gone. Maybe not. Probably not. But 250 stocks. So let's turn that into a watch list. Oh, I got to adjust something first. We want all of them, right? So we got to set this to the right number. That way we get all. And that way, when we turn it into a watch list, the watch list actually has every name on the list. Now, this is the basket of stocks, okay? Because in this list, we don't know what's breaking out, what's breaking down, what has earnings, who's getting sued, right? That's just our pool to search from. So now we can reset this and find that list that I just made. So we're going to scan that list and we can now intersect it with the sector that we want. So if real estate's doing good, we can bring up just the real estate companies or pot stocks, technology, right? Whatever it is. And it'll only search our basket of stocks to give us the matching pieces that we're looking for. Or maybe we just want, for an example, the NASDAQ companies. How many names in our list are from the NASDAQ 100? 52. Not bad, right? So we would use that to see names that are in the NASDAQ 100, just for an example. So it really narrows down your field. Now that we've got this list, though, let's see how many have a sizzle. Scan in just our list. I hate when it does that. None. None of our names have a sizzle today. If you don't know, sizzle is the 5-day average or doing better than the 5-day average. So we could do the call sizzle, stock sizzle, volume sizzle, volatility sizzle, but no luck, right? All right, so there's the list, 250 names. Thinkorswim is going to give me an error for that, but it's all right. We're going to put them in alphabetical order. And you can use a scanner for what I'm about to do, but there's the visual play to all of this, right? Around 2 or 2:30 in the afternoon, I guess I could have sorted these by bullish and bearish. That would have been helpful. So let's sort them real quick by bullish and bearish. We want the high-low graph. Just loaded it. It's a Thinkorswim thing. It's not custom, so just put that on there. And the things that are getting bullish flows will have the green here up at the highs. It's at 96%, so that matches. And then the things that are the most bearish flows will have the red numbers, right? Like this 90 minus 97%. So Rocket Mortgage, for an example, which is getting hit with the moves in dollar and yields and treasuries and bonds, that's hitting Rocket and it's hitting Open and those kind of Redfin is another one. So it's getting whacked. So we can take this list and we can sort it just like that, right? Between bullish and bearish. If you're looking for something a little, say, not excited, maybe you want to do some iron condors or something, then hit the ones in the middle that are getting no flow, like VST, On, Lulu. Those guys, they got nothing, right? Nice range. That actually does look pretty nice too. It's a legged in iron condor right here. Would have been better if we'd have caught it yesterday. So what I would have wanted to see yesterday afternoon, just like we're doing today, is I like to zoom in on a chart about 40 days. That's why I keep that saved at 40 days. Because at 40 days, I can see what's going on. And in my short-term trade, this is all I need. If I do need more, then, we've got another chart and we can zoom out a little bit more. Moving averages and that sort of thing. But just for short term and what's going on with price, yesterday afternoon, if we had saw this reject and saw it below the high of this box and closing near the mid, that would have been a nice trade opportunity. I would have liked to have seen that yesterday. I probably would have thought about a trade. So we can see how yesterday's price set that high and then was giving lower highs and lower lows. It could have pulled back and then just broke out and went higher. It could have. We never know. But if we'd have took a swing trade on this, we've got defined characteristics. It needs to stay below 52 and a half. We could run it for, a month out, not this option's expiry, but October's expiry. And we could aim for the lower end of the box. So we've got a stop, a target, low risk entry. We could be buying puts on a day where it had gapped up and was still pretty bullish in the option space. That's when I like to buy puts, is when it's bullish in the option space. And if I was wrong, then I'd get my hand slapped, a small loss, and I could move on, or I could look for a rejection. So if it did break out, where's it going? To close this liquidity gap at $54. So I could hang on and see what happens at $54. Is it going to reject there? Is it going to close above? Right. And then I could decide to manually exit my trade at that point. I like the ones that have a known destination, clear targets, places to put my stop, and an understanding of where the heck are we going? Because I don't want to get in a trade and then 5 days from now be sitting there thinking, gee, I don't know. Should I close it? It's doing good. I'm making money. I don't know. Maybe I should hold on. I might get more money later. No, it's losing. Should I close it? Oh, I don't know. What happens if I get out and it's a loser today, but tomorrow it runs and I just should have held on? I don't like that. I don't want to be in that position. If you find yourself in that position a lot, you need to have the answer before you get in. Sorry, I can't type and talk, right? I can't chew bubble gum and walk. So these midday reversals or afternoon reversals, I like those. And the reason I brought up the watch list is on Thinkorswim, anyways. You can use the keyboard and you can just go down the list. So, for an example, I'm just using the arrow keys now. I'm not moving my mouse at all. And I can just jump down the list one at a time, trying to find whatever it is that I'm looking for. And I know the kind of things that I like to trade. Like I just passed one, I want to go back to it. These are moving. So let's put them back into ABCs so they don't move on me. Like Apple breaking out. So one of my things is I don't like to trade options in the direction of the market move. If it's breaking out on a day like this, I'm not the one to go in and get calls as it's running higher. I just don't do that, right? Getting it with calls yesterday when it was a red day, I would be willing to do that. Of course, you need a reason to want to do that, right? Some kind of news, um, some options flow that you spotted in the scanner, some reason, right? By the way, that was a pre-consolidation breakout that Adam Grimes has wrote about in his book. So it was a tradable long signal if you're interested in it. But now, in my opinion, I it's too late to go buy calls because well, it's already made the breakout and the move. I like pin bar plays. I'm gonna get rid of that. That's annoying. Now I got the list, right? These are the kind of trades that I like. Thematics, reversion, continuations, breakouts, and I'll trade those. But it's not because some textbook perfect pattern set up. Because I have just found over the years that that's a joke. I've never had any luck with it, and everybody else is already going to find those for you, and you can see them all over the internet. If you want to know some social people to keep your eye on, Trend Spiders got a really good Twitter account. Keep track of them. If any of the big hyperscaler names are going to break out like Apple just did, I'm pretty sure that they had Apple covered in their Twitter feed, right? That they pointed out the breakout as soon as it was happening today. Maybe even earlier in the week, they may have said something about, hey, Apple's coming back up. It could be ready for a breakout, blah, blah, blah. That way you're not wasting your time trying to find the obvious ones. You'll already have them. I think Thinkorswim really screwed up when it changed the way that widget works. Now it's just goofy. See if this fixes it. So what I do with breakouts is I look for them to get overextended and then play the mean reversion, or I'll do stock only and I'll slowly start to buy in. But only if, and that's not a short term trade, that's only if it's a longer term trade. So if I was looking to own Apple, say over the next 2 to 5 years, and it was a breakout, I wouldn't mind buying a little bit, but I wouldn't get the whole position at once. And that's more of a long term kind of a buy and hold. It's not a short term trade. For me, a short term trade, this already broke out, you missed it, and you could wait for a like a Busby setup. So you could put it in a watch list and say I'm looking for the Busby, which would be the idea that it comes down and checks 100 and then makes the run. That way you could buy calls on the red day, the day that it's falling back down, if you still wanted it after the breakout. Some context that will really help with all of this is having a set of rules like we've talked about before, a distinguished set of tools that you use all the time. You don't jump around to different tool sets and change your charts up too much. This is my default chart setup right here. So if I wanted to go long in a trade, it has to be above the 400 week. If it's not above the 400 week, I don't want to look for longs. It doesn't matter that it's going up. I wouldn't be looking for longs. It needs to be above the 400 week. If it's above the 400, I could take it long, but then I would want to worry about how far away from the 10 week it is, because that long is likely going to stall out if we're too far away from the 10, just like Apple did back here, 5, 6 green weeks in a row. And then it tried to get too far away from the 10 and it just couldn't do it. Right. So if it's a breakout, where is it above the 400? And then how far away from the 10 we are on the daily. If I'm looking for a long, it needs to be above the 200. I'd also like to see an upward sloping 200, not a down sloping 200. That one, it's not as critical because we're talking short term trades, yeah, 6 weeks kind of thing. But if I was going for 3 months or 6 months, I need to have that 200 pointing up, not down. In that same logic, back to the weekly, if it was a breakout, I want to know where the Bollinger Bands are. So here, for an example, we were not on the bands. I don't know if you can see that in the stream because it's kind of dark. I make it that way so that it's not intrusive, but the band is all the way up here. On this day, for an example, or even the day before that, we'll use the day before. On this day, if it was starting to break out and we are like, oh man, yeah, heck yeah, it's breaking out. Maybe I'm going to go long. I would be asking, hey, where's the Bollinger Band at? Oh, it's way up there. We got room. We can go all the way up there. And then I'll be concerned. That's 255. The breakout was around 245. So, yeah, that's good. Plenty of room. But it would be something I'd be asking because if there's not enough room on the breakout, then I'm not going to bother with the breakout. Same thing on the breakdown. There has to be room to get to the breakdown. So the Bollinger can be your price target. If we do get a breakout, where are we going? We're going to the Bollinger. If it's something like this, though, where the Bollinger is already stretched and it's ahead of price like that, I don't like to use it. It has no input for me at this point. It's just, I would ignore it. No input. It would only have had value when we were back here in the middle, say while it was starting to squeeze, that if we were to get a breakout, where are we going? To the Bollinger Edge. And gee, what did that candle do? It broke out and it went to the Bollinger Edge. That's the whole idea, right? That's why we want to use it. But I won't use it here because we're already curved We're dragging it higher with us already. It has no input. So I like to find things that are stretched. You can use the Z score for that, or I use the 10, but if you want something a little more technical, the Z score works. And then I like to find basket of stocks that are doing good or doing bad for a particular reason, preferably something with a macro backdrop, like oh the all the uranium stuff connected to the data centers and AI. That's a really popular theme now, but it wasn't so popular, say last year, right? It took time to kind of build up and then it snowballed and everybody got in it and then it dumped back down again. But at least it had a connection to it, right? And we was talking about gold before the big gold moves. We had a long stream where we talked about at some point the really cheap gold mining companies. And we're talking about these low float penny stock trash. They're not profitable. They got bad earnings, bad options, low float. The warning was keep your eye on gold and those mining companies because every like like a cycle. I don't know if it's 10 years, 20 years, but every so often the cycle comes back around and even the worst mining companies in the world will get bid. Everybody will get so excited about precious metals that they'll even bid the worst mining companies out there. And all you had to do is keep your eye on them. And if you go look at those mining companies, sure enough, they got a nice bid. They broke out. They had a beautiful run. Now they're all washing out now, but you know, in the last 18 months, they got their run. So I try to tie my trades into something like that. Some kind of market backdrop, um, falling yields, falling dollar, rising dollar, Japan, interest rates, the VIX. The VIX is another really good one. Or financials at the start of earnings, they always kick off financials, which means when you go looking for uh, stock trades, the banks are almost always the ones that are done with earnings first. And then, well, earnings are out of the way, so you can trade the banks. I mean, look at American Express on that breakout. That's fantastic. So hopefully, between the book, that website, and this basket of stocks to choose from, you'll have a really nice setup for shopping for your next trade. And I already know somebody's going to ask, well, can I trade a stock that isn't in the list? Yeah. I mean, just because it's in the list doesn't make these great. You're going to find things that are not in the list and then you're going to want to trade it. Just keep track of things like its earnings, its dividend, why is it moving? I mean, if you can add that why behind it, it's fantastic. Thinkorswim is really set up to give you the kind of information like what does this company do? What's its earnings? Um, Tradeovate's got some pretty good stuff too, but I use Thinkorswim for my analysis, and so that's what I tend to do. But you go to analyze and come down to fundamentals, and you can look at a company's earnings. You can see what they do, right? The risk profile. You can see what the CFRA charts are for this company. Let's see where those are at. Product depth, I think that's what we're headed for. No, that's the VIX. Where did I put those? It should have been in fundamentals. I think it's just because I don't have the connection. Let's connect it. There it is. No, I made it up. Busby is my word, right? So the this is what a Busby is, and this is why I made it up. So in every textbook about price action, it talks about price being in a range, right? And if you study that, what they'll say is some of the best trends in history started with price being in a range. The wider the base, the higher in space. That's a phrase. Or the longer we consolidate, the higher we can travel, right? So it starts with price being stuck in a range. So when it breaks out, a lot of times what price will do is it will pull back to the old resistance and check that old resistance to see if it is new support. Now that's a mouthful, right? Breaking through resistance and pulling back to check old resistance for new support. Saying it once really isn't a big deal. Saying it 5 times really isn't a big deal. Say that 15 to 20 times every day for 5 days a week. You get tired of saying it. So I finally was like, you know what? I'm tired of saying this. We got to just give it a name or something. This is just getting ridiculous. And I was watching a stream from a guy named Tom Bowley, or Tom Busby is what I called it, but somebody later said that it wasn't Busby, his name was Bosley, but whatever. He was this grouch and he was yelling at people about a breakout. And someone in the live stream was like, "Yeah, I traded that breakout, but it didn't work. It came down and it stopped me out." And he was literally screaming at him in the live stream, like berating him. "You stupid idiot. I told you, blah, blah, blah," just screaming at him. I'm like, "Yeah, that's the name of the Busby right there. I'm gonna name it after that guy. What a jerk." So that's the breakout right here. Price tested old resistance, tested it again, finally broke out. There's the pullback to check old resistance as new support, and away it went. Busby. Now, I made a video on that once because people were just getting it all backwards and confused. And it seems like most people get hung up on the idea that some of the best trends in history started with a Busby. And so now they're just all dead set that I'm going to find me a Busby to trade. Whatever. I don't care. It's just the fact that when price breaks out, a lot of times it pulls back to check old resistance for new support. And we even see it in the ES, for an example, all the time when it breaks out and it hits 1236. And then what's it do? It pulls back from the 1236 to the 100 before continuing to go on the breakout. It's the exact same thing. Busby. We broke out, pulled back to check old resistance as new support. Now, if you want to get into deeper price action, it's not necessarily trade setups, but it does go into detail about like pre-consolidation breakouts that I mentioned. That would be Adam Grimes and the art and science of technical analysis. I have that book too. Give me just a second and I'll put that one in the chat. Now, talk about an old book. This one's old. But what really got me about this book is I built my trading strategy from scratch. I didn't get it out of a book. And it took a long time. It took me a couple of years to really dial it in and get it the way that I wanted it to be. And then along the way, I come across Adam Grimes and I'm reading his book and I'm like, "Oh my God, this guy wrote a book about my trade strategy." Well, obviously he didn't because he wrote the book years before I ever started trading. He didn't copy me. I didn't copy him, but we came up with the same answer. A lot of the things that he talks about in that book, I do. I named it something different because I didn't know that it had a name. So I just gave it one. Or Maybe I use modern tools that he doesn't necessarily mention in the book, but man, me and that guy are on the same page. Yeah, that's what I thought too. Great minds, right? So I took that book was the first book that I ever broke apart and put into Discord. I've done it to other books since then, but that was the first one. And it makes for a good example, right? I think it's in here. There it is. Chapter by chapter, I cut that book apart. I brought in all the pictures. I brought in every chapter and I went through it word by word, just crawling through all of it. And there was stuff in there that I hadn't even considered, right? Because he got into, oh, he names the lady now. I can't remember her name, but there's a famous RSI trader who he references a little bit. Well, I didn't know who that lady was. I'd never focused on anything that she was doing. And so, of course, I didn't know everything that was in the book, but really good stuff. And it is an old book. So, maybe you could find a more modern version, but I thought this book was fantastic. And he had Busby in it. He just didn't call it Busby, which is funny because I was like, there's my pattern. The antitrust there, I just saw it. Where was it? The antitrust trade is a trade that he uh, references, but it's not his. The anti pattern, trend termination patterns. Linda Radsky, that's the lady. MACD, not RSI. So that's why I keep notes because I get it wrong. Let me Google it and see the cover because a lot of books they just start to blur after a while. But I'm really good at remembering the covers. Yes, I've read this one. That one's on the Bullish Bears read list, by the way. And don't get me wrong, those books were good. My hangup is that eh, all their work is done from like day trade, swing trade, right? And that's fine because swing trade. But all their stats about will it work, won't it work, what the history was, how frequent it shows up, those numbers aren't right anymore. They're not even remotely close to being accurate because the world has moved on so much since then. So don't get too hung up on the occurrences, how often it happens, and the success rate of the trade, because that's BS now. Those numbers are just so gone. You still want to know what the pattern is. You want to be able to recognize the opportunity to trade. And one thing that I hear from traders a lot is, but how do you know that your strategy is good? Like, what's your stats on that strategy? And I mean, honestly, I don't keep track of it because one, if I can go back in the past and find it again and again and again and again, well, there's my occurrences. It was easy to find, and I'll find it again next week. And then the success rate, well, you and I could both trade the same stock on the same breakout, and one of us can win and one of us can lose because how we trade it would be completely different. So I don't get too hung up on the statistical backdrop of how good is this strategy? Does it fail or not? I keep track of my own trade results and see, hey, how do I do with this trade? And the reason for that, I've got a really good story on this one. It's a gap close. I put months into that strategy, months. And on the backdrop in the testing, It was a popular, that's not the right word. It was a profitable strategy, an excellent profitable strategy, like a really, really good strategy. So I put all kinds of time and effort and energy into building out a gap close trade strategy. But when I traded it live, I found out that it is not a good trade strategy and I don't want to trade it. The backdrop, the back testing did not show me the flaws that were inherent in there. And I only found them by actually trading it live, looking at my results, and coming to the conclusion that this is a bad trade strategy and I don't want to trade it anymore. For background on the trade, we're talking about going to the previous day's 4 o'clock close after the market opens at 9:30 today. That's what we're talking about. So here for an example, we closed at 4:30. The next day we opened at 9:30 way down here. That gap is what we're talking about closing. And it sounds fantastic, especially in equities. Now, equities, maybe I would do it, but in futures, nope, I won't trade this strategy anymore. But at the time, I didn't know that. Everything I found says this was a really good strategy. Because look, what did price do? It ran up there and it closed the gap. Ta-da, done. But trying to trade it for myself, I learned along the way that I don't want to trade this strategy. So if you're trying to figure out what strategies you want to play, like we talked about yesterday, one, go back and find examples of them in the past. When you're going back and you're looking for examples of them, if you can't find any, then it has really low occurrences. It must not happen very often if you can't find any of them. And in those Japanese candlestick books, there was a candle with a very high success rate. I think it was 95 or 97% success rate. That number really got my attention. I was like, oh, wow, man, I got to learn this one. That's fantastic. So, of course, I continued to read the book and I studied it and blah, blah, blah. Well, at some point in the book, they say, that it's a very rare candle that happens like, once every 10 years. Well, why didn't you tell me that from the beginning? I wouldn't have wasted 45 minutes. You know, eh, I wouldn't have done anything with it. I'd have just ignored it and moved on. What a waste. So it doesn't matter that it had a high success rate if you can't find it to trade it. Some of the rules that you want to try to put together is how to manage the trade if it's not working. I see a lot of people who are in the trade and then they try to figure out, what am I going to do with this trade? It's working. Maybe I should keep it. It's not working. Maybe I should get rid of it. You don't want to do that, right? I guarantee you that does not work well in the outcome. You want to have crystal clear answers for, I'm getting in this trade today. What am I going to do if it doesn't work? Where am I getting out? Am I going to add to the trade? Am I going to fix the trade? Or am I just going to abandon the trade? And look, things happen, right? I can get in this today and then, man, who knows? Maybe the CEO gets arrested tomorrow. I didn't see that coming. You know what I mean? So that wasn't in my plan. I'm going to have to figure something out. That happens. It happens to everybody. That's not a big deal. But what I'm talking about is at least having a plan. If the plan has to change, that's fine. It happens. But don't get in if you don't have a plan. And then a lot of the things that we talk about in the day trade, the stuff that you guys see me post, the 1236, the 111, hey, that stuff works even on swing trades. So, you can do that also.
I always have a plan. If they come in the front door, I go out the back door. But beyond that, when I go into a trade, I plan to make money. Then that works. Then that okay? I mean, really?
Yeah, always I have a plan to make money. It always makes me giggle when somebody's got a winning trade and they don't know what to do with it because they're like, I always lose and this one's winning. Should I keep it? Like, it's your first winner. It's funny,
Yeah,
but it's
I
true
remember that in
though.
the early days because I didn't understand price action.
Yeah. Having a plan, though, is all the difference in the world, even if we don't follow the plan afterwards. Now, when it comes to using the candlesticks for analysis, my approach is to see what I have and use that in my analysis to better narrate what I've got right now. But I won't use it to say, well, because of this candle, I think we're gonna do A, B, C, D, whatever. Right. So if it's a 3-bar reversal, I know what's supposed to happen next. If it doesn't do it, I'm out. Here's my reversal bar right there, by the way. It's the same one we were showing yesterday. That's the evening star reversal and the leg out, and it's a beautiful leg out. That it's like 2x the size of this bar, right? This exit bar. And it kept going. What a beautiful reversal. So I'll use those patterns, but I don't use all of them. So for an example, head and shoulders, that's the butt of all jokes for me, especially in a day trade. If it's got a head and shoulders, I will never ever take a trade because I point to a head and shoulders and say, "Oh wow, look, it's got a head and shoulders. I'm going to trade the neckline breakout on that head and shoulders because look at that head and shoulders." Never. But I will use the head and shoulders to point out, hey, it's got a reversal pattern that has formed. It's a head and shoulders, and that is signaling a reversal with a move to the upside. I'll do that. Maybe we're splitting hairs here, but to me, that's a big difference between those two. Now, we've talked about how I like to buy puts when the market is green, and I like to buy calls when the market is red. It does not fit the books, right? The books don't tell you to do that. The books tell you to wait for confirmation that it broke out, it has elevated volume, blah, blah, blah. That's not my style. I'm not saying that it's wrong. I'm just saying I don't do that. So I'm zoomed in, right? This is the zoom in that I normally do. Look at all that sell side resistance here. I'll even move it over so we can see that wick on the doji. It hit resistance. It hit resistance. It even broke out and failed, and it hit resistance, and then it finally broke out. Now we're getting a Busby. But I can see higher highs, higher lows, two big exciting days that closed very bullish, and then this reversal up here. And it's not a nice 3-bar reversal either. This is really nasty, ugly stuff. But we got through all that resistance. Now we got to check it to see if it holds. If I was looking for a long trade, this fits. This fits for a long trade. All it has to do is stay above this angled resistance here, right? This support level here, angle support. Because if it gets below that, then I no longer have higher lows, and that's going to be concerning to me. And I would rather buy the call on a red candle, especially after 3 or 4 red candles. That's fantastic. It fell down to support. That's a Busby. I'd take that. But you won't find that in the textbooks.
I bet you were hell in elementary school. I bet your teachers cussed every day they saw you coming in the door.
I could tell you stories, bro. I am a third grade dropout. They kicked me out of the third grade. My parents had to move. I made it to fifth grade at the new school, but I wasn't really doing any of the work. And then after the fifth grade, I just quit going. My parents didn't talk to each other very much. So I told my dad that mom was going to school to enroll. And I told my mom that dad was going with me to school to enroll. And I didn't enroll. Fifth was the last year that I went to. Of course, later I went back and got my GED and, college degrees. But yeah.
Interesting. Interesting. Okay, that explains a lot. That rebel attitude there. Yeah, yeah.
I did all of the schoolwork in the first 2 weeks, the entire year of schoolwork. I did it all in 2 weeks. And then I was just bored out of my mind. And, you take a third grader and get them bored, and, well, trouble ensues.
Oh yes, I get that.
Yeah. Drama, huh? So, with this approach, I can go through a list of stocks really fast and find the ones that are breaking out. And I tend to use a pencil and paper, but you can just keep a spreadsheet or whatever. Which ones are setting up for an opportunity, like Apple with this breakout? All right, I don't want it today because it's already broke out, but I would put Apple on a list for potential mean reversion, or maybe some butterfly targets. It would just be like, hey, remind me tomorrow to look at Apple, kind of thing, because I don't want it today. And a really good website for the trouble that I'm going to mention next is TrendSpider. So here's the trouble. I think we've all set an alert at a particular price or a particular line, and price gets almost there, but it doesn't get there. And then it falls away and you miss your trade because it missed your alert by 2 or 3 pennies, right? Maybe even at 50 cents, whatever. If it hasn't happened to you yet, it will, and it sucks, right? When you identify the best setup and all you need to do is have price get to a certain spot. So you set an alert and it misses your alert just by a wee little bit. Well, on TrendSpider, you can set an alert and then you can say, if price gets within whatever range of my alert, let me know. So that way, price doesn't actually have to hit that specific line that you drew. If it gets in the zone of that line that you drew, it'll let you know. And that's really good because a lot of times the zone is good enough, right? That it doesn't have to get all the way to that particular spot. It got in the right neighborhood and we're good. We could take it. I'm on ABBV and I see a pattern here that for the afternoon trades that I'm looking for, if it's a day that looks like this and it rallied up off of that low and it's higher than the 50% mark, that's the kind of day that I would like to look for in the afternoons for an opportunity to go long. And you can see the next day it fell right back down, right? So the long didn't work out right away, but it did work. And the reason I like this is if it closes the next day lower than that 50%, then it's a small loss. You get your hand slapped, you close the trade, you move on. If you haven't noticed yet, I don't bend over backwards and try every imaginable thing possible to avoid a losing trade, right? Because I'm telling you, is a waste of your time. You can check all the strategies that you want for the highest conviction, best probable outcome, blah, 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 whatever. It's a waste of time. What I do instead is focus on which trade am I looking at that has the least amount of risk that I can participate in. And what we used to do in the live streams in the afternoon is I would bring up the Dow Jones and we would just go through the Dow because it's 30 stocks. And we would put trades on anything that had the setup. And it didn't matter, long, short, sideways, whatever. We just go through the list. Because with options, you can go long, you can go short, you can go sideways, short, and sideways, long and short, but not sideways, you can do any of those. And so we would just go down the list like, okay, yeah, we got this one. We're going to do a call vertical, and then go to the next one. Yep, okay, butterfly next. And we just go right on down the list. It's a little fatalistic, but if it's going to lose, it's going to lose, and there's nothing you can do about it. And if it's not going to lose, then it's going to win, and great, you got your win. If you're managing your risk and you're trading setups that consistently have good outcomes, you're going to have consistently good outcomes. And when they lose, it's a small loss. You move on to the next trade. Yeah. Yeah, absolutely. We got plenty of time. The gamma exposure. So every day, let's bring up what I post so people understand what we're talking about. And by the way, Volland should be back up and running again by Monday, maybe Tuesday of next week. Volland is going to be back up and running, which is fantastic. They've been down. They got into a disagreement with one of their developers, and the developer hijacked the entire platform and turned it off. And so then they had to take him to court, and the court intervened, and the guy said, "Screw the court," and he turned everything off again. And it's been a big litigation, but it seems like they're getting it all resolved. Okay, those are yesterday's. Yesterday, we're getting there. All right, every morning I post the founder's note. It's the PM edition. So this is looking back at yesterday's close, and it's talking about what happened yesterday, and it's looking at the options and any setups that came through in the options dealer gamma market. So if you don't read this, you should at least check it out. Yes, it's going to talk about things you don't understand, but it will also have just plain English things in there, like we're still bullish, we're getting bearish, those sort of things, right? So it will have some actionable plain English in there, and it's a review of what happened yesterday. Then there's these three text documents. This one is for Thinkorswim, or excuse me, for TradingView, and it says it right there: TradingView levels, Thinkorswim levels, and then Spot Gamma Thinkorswim levels. These two are from my own private watch list. I could only have like, I think it's 30 stocks. So I put in my 30 stocks, and every day it gives me the dealer gamma levels for my watch list. One for TradingView, one for Thinkorswim, and then this one for Spot Gamma's levels, which are actually these levels. So if you import that every day, it will give you these levels drawn on the chart for you in Thinkorswim. I don't have the TradingView one, right? It's just that one. This picture is telling you if any of these call wall, put wall, I don't do them all, I just do the call wall and the put wall. If that call or put wall moved up or moved down, then I share this picture. If they didn't move, a lot of times you won't see me post a picture because, well, they didn't move. Why share the picture, right? So for a couple of days here, you can see that the call wall was flat and the put wall was flat. Neither one moved. I didn't share the picture that day. But then the call wall started moving, and I started sharing the picture. Today, the put wall moved up, but the call wall went sideways, and I shared the picture, which I try to write up real quick why I'm sharing it. The put wall moved, the call wall moved, whatever. All of that is from Spot Gamma. Most of it. Some of these are not, but the lines, all these levels, that's Spot Gamma. Then we get to these. Now, these are not from Spot Gamma. This is from a company called Trader Volatility. In the upper right, it has the rating for the day. In the upper left, always check to make sure I'm sharing the correct date, because I'm human too, right? I have to update it. And sometimes, even though I push the button and it flashes like it changed, it doesn't always change. So make sure I got the right date. In the middle, it's giving you the Gex flip and price. And this is this, right? That little bar right there that says Gex flip. But we can't tell from those numbers exactly where it is, so we have to look at it up here. That Gex flip is this Gex flip. Then there's your one standard deviation bars. One standard deviation, that's your price range for the day. And you can see where price is versus where those one standard deviations are. 70% of the time, we're going to close between those two lines. 30% of the time, we're going to close outside of those two lines. And actually, the number is higher than that, but a standard deviation is 68 point blah, blah, blah. So we just round and say 70. The options are always better than what it says, right? It's understated here. So if it says 70, then they really mean higher than that. Yeah, it means where in price action for today would the dealers turn from being bullish to being bearish. And that's a 0-day focus for today only. Where if we wanted to go and get a bigger backdrop, we would want to use Spot Gamma and bring up their platform and look at where all of the options are in the entire options structure for that particular stock or ETF and see where the big dealer gamma levels are. But for this, it's just saying at what point today would we turn from a positive dealer environment to a negative dealer environment? If price is above that level, then we're in a bullish environment. And if we drop below it, we're in a bearish environment. These numbers here, they don't really help, right? The 100,000 million, 1.7 billion, and 1.1 billion, don't even get hung up on it, right? It's just not going to help. So I do it for the Qs, the SPX, and the SPY. Now, this bullish rating is still, it's looking at what happened into the close yesterday, because there's really not a lot to work with in the pre-market, right? Especially in the SPX. There is no SPX in the pre-market. I mean, technically, yes, but no. So we can open completely bearish and just fall right out of bed. And we'd look at this and say, wow, that was wrong. It said bullish and we're falling like crazy. Yeah, but it's using the data that it had in yesterday's options. It hasn't used today's options yet because it's posted at 7:30 in the morning or at 7 in the morning. So we got to take that with a little bit of a grain of salt that, you know, when we went into the close yesterday, the options looked bullish for today's 0-day activity, but things could have changed and we don't know, right? So be mindful of that. And then after the stream is done, I go back and I check their website and we're looking for the AM edition, which I really felt like I had posted, but I'm scrolling down here and I'm not seeing it. I could have swore I posted it today. Some mornings I get busy and I don't get it posted, but I guess I did not post it. So let me post it. I bet I posted it in my Discord. Maybe. There it is. So after the overnight, they go in and they evaluate things again. And then they come out with this AM edition. Where'd it go? Wrong browser. So it's going to have things in there that you don't understand, but it will also have plain English. Like, we remain bullish in the SPX as long as the SPX remains above 6,600. I mean, that's pretty clear cut and dry right there. And check their date. They'll have previous statements. Like, this statement was from the 18th. We are looking for a rally, or from the 16th. That vol is cheap and you should probably buy some cheap puts. So they do have previous days statements in there just to see if their narrative has changed. And these are good, don't get me wrong. A lot of people focus on the one from the AM. I really like the one from the PM. And the reason I say that is, in the PM edition, they will show you trade setups that they saw in their tool. And I know if you don't have their tool, you're like, well, so what? I don't have their tool. I get that, but I do have their tool. And so I like seeing the things that they recognize as a tradable opportunity on their tool, because then I'm like, oh, that's a new one. I didn't know about that one, right? And it just gets added to my list of tradable signals. Here's the PM edition from last night. I don't know if it's going to have an example, but I've got documents that I've saved of their setups. I'll show you guys what a couple of those look like. They're really good. Here they were just talking about the Intel flow. So it didn't have a good setup, but they've got this one called the Matterhorn. I mean, I thought I named things wild. That one, that's pretty neat. Let me show you guys what the Matterhorn looks like. It's a really nice platform. The Now the question about, should you have access to these tools without relying on me to post it? Yeah, but right, like, having these tools is not cheap. They're not. And then you got to figure out how to use them. When it comes to uh, Spot Gamma, for an example, they've got an education center, and that'll be helpful because then you can lean on that. Let me get signed in here. And even without an account, they've got education that you can use. You don't have to have an account to see their resources in their database. So I'm logged in, and under resources, they've got a support center that anybody can see. And you can go to this support center and you can type in something like call wall, and you can see all the articles they have for the call wall. And of course, they recommend, if you're looking at the call wall, you're probably going to want the put wall. Articles that talk about this, also combo lines, hedge wall, key delta, key gamma, large gamma, what all of that means, they've got articles on it. It's all free. Doesn't cost you anything. You don't need an account to see this page, right? And that's the glossary. So, should you have an account? I mean, yeah, what happens if I just say screw it and I leave? You're not going to have access to this stuff, right? Now, I'm not going anywhere, but I could fall over dead with a heart attack tomorrow, knock on wood. Then what are you going to do? The Some of these tools exist on different websites. So you could shop around and try to find maybe something that's a little bit cheaper. The problem with cheaper is that it may not have everything that you're looking for, right? Like Traders Vol. Let me bring this site up. Now, Trader Vol connects to stock charts which also connects to, oh shoot, I forget the name of the other company, but they're all tied together. And if you have an account at one, then you get cheaper things from another account, right? So let me get signed into this one. Here's those GEC charts. And these guys have education too. In fact, they built an entire GEX. They didn't call it a class. They called it something else. This is not going anywhere. It's going. Come on, do it. But they built an entire education center focused on learning dealer hedging dynamics. And it does have a blog here, but it's not as robust as you would think. So it's okay. It's not bad. I like it. It's just it's not as robust as Spot Gamma. Even Tradie Ticks on the Discord has dealer gamma stuff built into it. So does TrendSpider. Hey, Marziti, you have a good weekend, buddy. Be careful.
Thank you, sir. You too, and everybody else. Enjoy. Later. Bye.
See, we want Gex. We just bring it up, and we can get Gex levels for whatever we want right there. And you have that as a part of your service. This doesn't cost you anything more than what you're already paying for, right? Because you're here. Yeah, that would be nice, wouldn't it? Um, so in things like Spot Gamma, they've got what they call hero, spelled with an I, HIRO. You should watch some YouTube videos where they were promoting this because they really go into detail on that one thing to see if juice is coming in. On the right hand side, we can see this little summary in the upper right. So I'm going to just scroll down here to see what's been getting some juice. And of course, at this late of the day, it's all SPY, but we'll just keep going until we see something. And if we don't, I'll just put something in. Let's try the screener instead of just flow. Get a high hero signal. All right, Lucid's getting some flows. Let's bring Lucid up. Sometime today, sweetheart. Yeah, I really need to get this computer sent in. It's not them. Trust me, it's mine. Maybe we'll go to Walmart or something. I'm going to turn some of this stuff off. No, I'm keeping Thinkorswim. There we go. So we've got Walmart here, and it's got Walmart flows, and it's telling us where the hedge wall is, the key gamma strikes, where the dealers are at. Are they positive? Are they negative? And then we've got that signal. If I didn't lose Walmart, there it is, the hero signal down here. Now, their videos would explain that in better detail, what the signal is, what it means, but this is getting flows, right? And we can visually see those flows in the chart here. And if I wanted to, I could turn on just the puts, just the calls, just the retail, only next expiration, all trades. I've got some say over what gets shown. But just because something is getting flow does not necessarily mean that it's going to take off and be a big runner. It can be getting flow because they're getting ready to dump it for all we know, right? Like you gotta be able to put it into context. And if you're just looking for actionable, or if you're just looking for action, that's on the Discord. It's down here. So go to the trading ticks, and it's these things. There's your stock breakout. That'll be the price patterns that we were talking about. Stocks that are breaking out. And then there's your sweeps. Well, if it's getting sweeps, they're grabbing this thing in big trades. A lot of juice is coming in. Now, one sweep by itself doesn't really get my attention. But what I like to see, and let's see if we can find one, is when it has repeat activity, just like this one. It hit again, and it hit again, right? Well, actually, it was three, and then another one, and then another one. That's five. They weren't all on the same strike. That would have made it better. And they weren't all on the same expiration. That would have made it better. Yeah, you can run a search in the upper right. So not only can you come into the sweeps and see what's being posted, but you can run a search to see if what you're looking for has had any flows today, this week, this month. Now, if you was to go and get your own subscription to the Traditix website, that would be a good buy, right? Because then you can just search their site. And these things that are coming in is not everything that their site has. It's only some of what their site has. So let's get signed into their website. You know, what I use to see what's getting flow is my Thinkorswim scanner, the high low 90. I mean, don't get me wrong, having these paid sites are nice because then you can see all the options data and dark pools and whale targets and all that stuff. But my Thinkorswim scan is free. I can run it whenever I want, and I can weed out anything that I don't want to see. Like if it doesn't have weekly options or if it doesn't have penny stocks, then I can weed that stuff out and I don't have to see it. And that scanner is the best scanner that I've ever been able to come up with. And I've been using it for years and I haven't found anything that does better, that I didn't have to spend a lot of money on. Let me add that last part to the sentence, right? Yeah, I've done so many live streams on this scanner. Thinkorswim has an indicator called the high low graph. I added it to that watch list that we were looking at, right? This one. This high low graph. Well, if we sort by the high low, things that are the most negative is 99, and things that are the most positive are plus 99 or 100. Right? That's where it maxes out, is 100. I went through every single indicator on the Thinkorswim platform one at a time. I loaded it up, used it, researched it, hunted it down on the internet, and went through every single indicator. Well, when I was done with every indicator, I went through every watch list, everything that you could add to a watch list column. I went through them one at a time. When I got to this one, I was like, what the hell is this? What's it doing? What's it looking at? How am I supposed to use this thing? So I turned it on and I sorted it just like I did here. And what I found was if something was making moves on the day, especially on the intraday, that it would have a really nice setup or it would be breaking out now. And it was there all day. All day long it's got a name in there. Maybe it won't have a lot of names. If it's bullish today, you might not find bearish names. If it's bearish today, you might not find bullish names, but there's always names on these two lists. Look at Penn. What's it doing? Breaking down out of that range. Or Wells Fargo. What's it doing? Breaking out on the range. Always, all day long, every day, right? So I was looking at that scanner and I thought, this is a really nice watch list column. I really like this thing. So I opened the code and I took it. Well, of course, you can do that, right? Just bring up the watch list column. There's the code right there. So I took that code, I copied it, and I went over to the scanner on Thinkorswim and I made an indicator out of it and told Thinkorswim, hey, scan what's going on out there and find me stocks that have a 90 or better or a minus 90 and lower. And that's what my high low scan does. Now, me, I keep them separate. I got one that's negative and one that's positive. But a client of mine, he mixes them together because he don't care, long or short. He just keeps them all in one group. You do you, right? Like, I don't know what's better, but I like to do it this way. So for my bullish one, that's the only criteria, penny options, and it's greater than 0.9 because it actually doesn't go to 100. It goes from, it's a decimal. So what it's actually doing is going from a minus 0.99, and then it goes all the way up to a positive 0.99. That's what it's doing. So if it's the most positive, it's 1. And if it's the most negative, it's -1. And it's looking for anything in the middle of that. So, okay, we can work with that. So that's what I built the scanner to do. If we open up this code, which it says it right there, the high-low graph is greater than or equal to 0.9. That'll be the bull side. And it has to have penny increment options. And then there it is. Make one for the bull side, make one for the bear side. But this is only today. It's not inherently by itself, it's not swing trade. It's just what's getting flow. That's it. But what I noticed is if you run it all day long, you might see a name like Roku pop up all day long. Like it might fall off for 10 minutes and then comes back again. Then it falls off and then it comes back again. But it's Roku like all day long. It's Roku, 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 Roku. So that kind of gets your attention after a while, right? Other names, they flash, they're on there for like 10 minutes, they fall off, and then you don't see them again for the rest of the day. So just because it pops up doesn't mean it's a trade. It doesn't mean it's quote tradable. It's just, hey, it's getting flow. You still got to go in and, do all the work, figure out what is that thing and do I want to trade it and what kind of trade am I going to do with it? Stock trade, options trade, swing trade, day trade, long, short. Yeah, absolutely. So this is my go-to that I like and it doesn't cost anything, right? If you want to mix it up, use this first, then you go into the Discord and you search for that name in the Discord to see if it's got any flows. STX right there. STX. I like that one. That's Seagate. And Seagate and Western Digital have been getting a lot of flow, right? Those hard drive companies. So if I'm sitting here in the main chat, I can go up to search and search Seagate. And now I can see that there was stock breakouts on Seagate. And then we had analyst upgrades on Seagate. Just, make sure you're checking the dates. That was yesterday. They got an upgrade and they're still going today. That was an upgrade from the 17th. So it's had upgrades for 2 days in a row. And then, of course, it was on the Stock Movers podcast from the 15th. Large put sweep from the 11th. Another breakout on the hourly. So you guys got a lot of tools here at your disposal. And it might seem like it's just a lot, but use the filter, right? Use the search, kind of narrow down what it is that you're looking for without having to go spend money on another subscription. I like having my subscription there. Don't get me wrong, it's nice. This website, we get it come back up here. Come back. So here's SMH. We can look for price levels like whale targets. And there we go. We can see the net flow in the bottom. It just went parabolic. It's heading to the upside. And if price continues to go up, there's the whale targets. And if we are looking for a short, then there's our lower whale targets. We can look at dealer positioning. So here, for an example, let's go to something like Seagate. Now, if you're unfamiliar with the dealer dynamics, you got to remember they are opposite of us, right? So if the dealers are positive, we're negative. That means in this run here, traders are negative STX. And that forced the dealers to be positive STX. They're not trading this because, like, oh, it's going long. I'm a dealer and I'm going to go buy a bunch of STX. No, no, no. They're only covering our trade. So if retail traders shorted this sucker, the dealers are the ones that sold it to them. So they're going to be opposite, right? Back here, the dealers were short, retail was long. Retail was long in that whole thing. And then retail got out and went short. So dealers were long. Well, dealers are still long. Retail is short this thing. But now that I zoom out, you can see that retail's getting out of that short position. They're getting in it long, but to me, they're late to the party. They were really good here. Retail ran that sucker up. So you could call that late money, blow off top, all kinds of other names you could give it. But just keep that in mind when you're looking at this page. If it's green on the dealer deltas, then they are long, retail is short. If you keep that in mind, you won't go wrong. Microsoft, for an example, dealers were net short because retail was net long through that run. Well, it flipped. Now retail is short, dealers are long, but that position is changing too. They're fading out of it. And then, of course, you could turn those whale targets back on. There's Microsoft whale targets. It'll do dark pool levels. Um, I don't think it has call walls and put walls. It might. Yeah, GEX levels, whale targets, biggest sweeps, daily dark pool levels, and then generic support and resistance. Oh, I reset the time frame. There we go. There's your SNR levels. So that's not a bad website, and that's just one tool. Okay, look, they got all these tools. So here's Apple with the options data on the chart, and then their intraday. It's a good one. I know a lot of people that use this because it's less complicated than Spot Gamma, and I mean that I get that, you know. And they've got videos on, I believe, every one of these. So if you was to go to YouTube and look at stock profit for Trading Ticks, then you would find videos that go into what is stock profit and how do they use it, or Bullseye or whatever. All of these. And that's really nice too, right? Because you want videos made by the company to tell you how to use their product. It's funny that they call it profit because Thinkorswim used to have profit. Back in the day, you could turn profit on and it would show you the options location on the stock chart. So you could bring up like the weekly and it would have, the calls in stock profit showing up here as levels. But it took up a massive amount of their resources and they turned it off a couple of years back. I think it's still working in the other platform, ThinkPipe, but not Thinkorswim. Of course, ThinkPipe is the institutional version of Thinkorswim, so they pay for it. They get the better flow. So if I was looking around, um, I would probably pick something up that looks like this. You could go into something that you can't adjust, like Cheddar Flow. So with Cheddar Flow, you don't make any adjustments. Their platform is the platform. It's already set up. You just turn it on, and the names you get, that's what's getting flows. A lot of people that I know use this because they're not options traders per se. Like they don't know anything about the options. They just know to buy calls and buy puts. And if that's what you're looking for, where you don't have to do any settings, you don't have to adjust anything, you just turn it on and use it, then Cheddar Flow is the way to go. I had an account here. I've tried all of these at some point or another. I've gotten a subscription to all of them. This is set it and forget it kind of stuff, right? But Black Box Stocks is the most complex that you can get, and Cheddar Flow is the least complex that you can get. So there's your spectrum between, changing every little knob and widget or just having something that you never have to adjust at all. Something in the middle would be like Wellstream. Wellstream's really good. These guys give you some adjustment, but not massive amount of adjustment. And it does have preset if you want to just, use the preset settings. It does really good. Yeah, there we are. Yeah, Trading Ticks is really nice. It is. They've got a nice background on the education on YouTube. They've got a lot of choices. And if you don't want to mess with any settings, then you don't have to. Hey, thanks for that. I want to check it out because I'm always interested in the new stuff, especially nowadays, dude. Nowadays, did you see that one that Kevin posted today? That place looks so cool. There's so many companies now that are coming out with stuff. So let's see what this is. It helps if I type in the right spot. Yeah, man. I've got emails from developers like crazy that are reaching out to me every day asking me, "Hey, will you test my site? Will you come over and use this and give me feedback? And hey, we'll give you access to this, blah blah blah. Do a review, tell me what you think. What can I fix? How to make it look better?" If I spent all day doing that, I wouldn't get any trades done. This is pretty sharp though. They got a nice intro page. I wish my website looked this cool. Yeah, no kidding. Well, I mean, they give me a lot of that stuff, right? Like Spot Gamma, Voland. Voland is like 1,500 a month, but they're down, right? They won't be up until next week. It doesn't even show up right now. But they'll be back. They'll be back next week, and then you guys will be seeing me post stuff from their website because I'm using it. They got YouTube videos though, if you want to understand the sort of stuff that they're posting. Yeah, they are. They man, they got screwed over so bad by that developer. So I've got access to a lot of platforms. Now don't get me wrong, I buy things like stockcharts.com, that's my account. But a lot of these options dealer sites, they just give it to people like me. They want us to use it, talk about it, find errors with it, promote it if we like it. So in the morning, when I post all that stuff, I'm doing it so that you don't have to, right? So that you don't have to spend $200 to go get a Spot Gamma account just to get that morning report. And even though I'm not giving you the afternoon report in the afternoon, if you read that one in the morning, you'll have a better idea of why something happened the way that it did yesterday to understand better what could happen today, right? That's why I share that evening one. Now I mentioned that they have shown setups from Spot Gamma. I'm going to post some of this stuff, right? So here's one. Of course, I want people in the stream to see it. So let me let me go to Discord. And what I'm sharing, they wrote, right? Not me. It's it's their analysis that they did on their charts. And I want to make that clear because hey, I can screw up like anybody else, right? But I didn't read this wrong. I just shared what they wrote. They said this was the QQQ and it had long strangle shape. I didn't know that when a lot of strangles get traded that it makes this shape. I didn't know that. So I found that one really interesting. This one is for Amazon. Look at that vertical drop in the call flows. If it was a trading day and it's sideways, look at that white price action. That's Amazon's intraday stock price. And everybody's just bored. We don't have nothing happening. And then, oh my gosh, what the heck is that? it fell like crazy, and then the stock chart went with it. Or the Mag 7, severely bearish momentum flows. The stock is sideways. It's that white line. Look at that, just sideways, nothing happening. Calls are trying to go up, still nothing happening. And then it just rolls over. Puts fall, calls fall, price falls. What a drop. Those sort of pictures are from the PM edition that I share every morning. Now, they don't have one every day, but when I read those reports, if it has one in there, I cut it out. Every time it has one, I cut it and I save it. Hey, Angel. Oh, she's working. Here's some topping signals. So I really like these. Now, one pattern that I talked about was the Matterhorn. Let's see if I can find that. Whoa, that's loud in my ears. Now that I'm looking for it, I'm not going to find them. Ain't that how it goes? Oh, there it is. Matterhorn. There. All right. This is what they call the Matterhorn. When I was reading their glossary, they said that there's this big mountaintop called the Matterhorn, and it has sharp cliffs off the sides, and that's why they named it that. So, okay, whatever, like I don't care, but they've got a lot of examples of this that they've shown over the years. You see that really sharp spike up, like it's a fake breakout fast failure, but it's in the call options. I've got a lot of examples. These aren't even all of them, guys. This is just some of them. Early warning shot across the bow, and then a real call Matterhorn right there for confirmation. And look at price. It just collapsed after that. High confidence topping pattern. It wasn't a short, but it was a top. And it was right against one of their key levels. So you just got to get used to whatever you choose, right? Trading tick, spot gamma, whatever it is, it doesn't matter. You got to spend the time to really dig down into it, read everything that they've got. What I like to do is make a Discord and then grab everything that they've got and stick it in that Discord and then slowly go through it and organize it to be what I want it to be. Like, for an example, I've got Investors Business Daily website. And what I did, I just went to Investors Business Daily with my account and I put every piece of information that they had into that website. I organized it. Everybody had their own channel. Everything that they had, I grabbed it. And as I was sorting through it and learning it and reading it, I learned how to read the platform, the signals on their platform, their tools. So you would make like your own Spot Gamma Discord and then, put all their stuff in it so that you can study it, learn it, analyze it, keep track of posts like this where they give you very clear signals of what they're looking for. Heck yeah, you know. To wrap up with some of the swing trade stuff, I've got some rules that I use that has really helped me out over the years. I don't like to short new highs. I don't care if it could be a mean reversion or whatever. I don't like to go short in all time new highs. And I don't like to buy a stock that's falling into new lows, right? That's just, I don't like that. And I have found that when I try that, I lose more often than I don't, right? So that's a good set of rules. Another one is that 400 period moving average. I know it seems silly because it's so far away, but the 400 week, it can keep you out of bad names. I'm just randomly looking for some trash. That's some trash. If I found this on my scanner, I wouldn't trade it because it's underneath the 400. It's just all tangled up in this trash, right? Like if you trade trash, you will get the outcome of trash. You want good trades on good patterns, on good stocks with good clean price action. If I go out to a chart and it has a lot of gaps like this, you might not be able to see that because of the moving averages. So let me go to another chart. Yeah, look at that. That's a daily chart of emerging markets, EEM. Look at the gappy, nasty price action there. If I bring up a stock and it looks like this, I don't care what the reason was that brought me that stock. I'm not going to trade it because that's trash. I don't want it. Inherently, if you trade bad stock charts, you will have bad outcomes. Sure, you'll get a winner now and then, but stay out of the trash. I want good stocks that are above the 400 week. If I'm looking for momentum, I want to see that that 200 is crossed up. I want to see that the 10 is up, especially the 10 on the weekly. I want really good, clean examples that it has momentum. Oh, yeah, man, we were hot, the Chinese stocks before they even got hot, right? Go back to the first of the year, January, we were talking about the China stocks getting hot. They do, but they have the fundamental behind them, right? So that's where you got to make an exception on what the rules are. Their stock charts are bad. Look at Baba, Baidu, JD, PDD. But you got to understand why. Why is their stock chart so bad? Because 3 years ago, the US said that these guys were uninvestable. Can you imagine? They were on Bloomberg, MSNBC, telling stock traders around the world, if you're in Chinese stocks, get out of them. We're going to blacklist them. You're not going to trade them. They're uninvestable. Well, what do you think happened to their stock? It hit the dirt and they got gappy and nasty and bad options, but they're coming back around. So in January, we were talking about the China stocks, and it was supposed to be that they were going to take off in March. And that's what we were all waiting for. March, 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 March. And what happened? Mid January, early February, they broke up and started running. China came in with stimulus. Yeah, they were. Yeah, they were threatening delisting and all kinds of stuff. They scared everybody out of the China market. And it lasted for a couple of years, but money wins. So people started getting back in them. They came in with heavy stimulus measures in February, right there. That stimulus blew it out of the water, and that's where the real run started. And I kept telling everybody, don't chase this. If you weren't in it already, just let it go. It'll come back. We knew it was going to come back because of the 200 period moving average. Right? Just for an example, bring up the 200 period. Let's just put it on there. And bring up something like Carvana with a 5-year chart. No, it's not too late. It's going to pull back. So, be very clear about that. It's going to pull back, but it's not too late. We're looking at BABA going up into 210, 220. It's not done, but it's going to pull back. So, Baidu, JD is another one. JD hasn't even started yet. It's going to turn into a BABA and a Baidu. All right, so here's the 200 period, right? They're both 200. I just kept one a different color. One's the EMA, one's the SMA. I put them both on to show you that it doesn't matter. So I don't care. Use either one. If we look back at a couple of years, hey, thanks for participating. Have a good weekend, and I will see you next week. You see that breakout at the beginning of the year? We were just getting above the 200, and it was like, look, the 200 is not sloping strongly here yet. You got time. Don't worry. Don't chase it. And that was right here. It broke out, and I was telling people on that run, if you're not in it, don't chase it. Don't worry. It's coming back. Well, I didn't know it was going to come back like that. I just thought it would have a good pullback. It came all the way back. But now look at it. It's going. But you can see that 200 is starting to rise up now, the way we want it to be, right? We want that upward sloping 200 period moving average. The next pullback can go half this distance or all the way back, unfortunately, right? So measure this last move. We could see 136, but sadly enough, we could come back to 100. I don't want to see it come back to 100, but it can happen. And we can even overshoot that 200 and come down below 100. Because yeah, it's parabolic. But it's not done. We're looking at, 200, 220. But if you want one that hasn't run yet, that's JD. You see that 200 period? It's just down here. We want it to have this same downward slope, but on the upside. We don't even have the upside yet. You're looking at JD into 2027, getting into 95 and $100 between now and then, right? But it's going to make a run before then. The only way that you can get this 200 period to curve up like this is for the stock to outrun the moving average, right? Let it get way up here and it'll force that 200 higher. And then it's going to come ripping back down and it's going to hit that 200. Just look at what it did on BABA and Baidu to have an idea of what JD is going to do. So here's Baidu. You're getting the big ripper right now. It's going to come back down. Don't chase this. You can get in around $100, maybe $95, unfortunately, right? Because, I mean, it's probably going to hurt. For all we know, it could even come back to 80. As long as it don't put new lows in, we're good. And if you look at those moving averages, this is telling you it's just getting started. That's one. Two, it's going to take a long time to get this moving average to turn and go higher. Eventually, we're looking for this. This is Carvana. Carvana is the best example that you could ever find for what we're talking about. It's a textbook example. Very swift descent. The moving averages came with it. It based, the moving averages crossed over, and then look at how they curve back up. That's what you want. If it's not doing that, and JD is still all the way back here, Baidu is right there, Baba is like right there. Well, they've still got all of this. All of them do, all three of them, all the way back up here. So you didn't miss, right? You're early. And it's going to pull back. You have to be willing to take pain or be nimble and get out, get in, get out, get in. One or the other, or mix it up. The way that I've taught people is, say you start out with 10 shares that you actually own, just straight out, you own 10 shares and you're holding that. You're not ever getting rid of those 10 shares. But then on the side, you're trading. And when your short term trades have made you enough money to buy another 10 shares, you buy another 10 shares and you hang on to them. You're not getting rid of them. So you use one account or use one to do your trading and you use the other one to just hold the position. And you continue to grow that position based on the profits that you've earned by trading it. We've got that gap that needs to be filled. Which I think it already did. Let me snap that line. Okay, so yeah, we closed that gap, but we've also got this gap, and that needs to be filled. So we're going to pull back here. Very likely we're going to go to half this space. That'd be around 34 and a half. I like that as the zone. We'll probably pull back to that. Maybe we test that 200 period moving average again. Both of these are 200s, right? I just made one a different color. So maybe we pull back into 34, digest that, and then take another run at it. 33 is good. I can't argue against 33. I think if we get to too low, though, we'll go and close this gap, and that would be 31 and a half, right? So we don't want to go too low, or it's going to want to get down here. So we'll be a little nervous of that. But as long as we don't get any new lows lower than this $30 low, I would be good. I think that'd be a gift, a shopping experience to bring it down into 31, 30. Because yeah, this one, it's got potential. So rules are meant to be broken. I don't like those jagged EEM looking charts with big gaps and broken price, but if there's a basket of them with a thematic behind it, like this, then we have to make exceptions to the rule. Yeah, AI. I think Jeremy's done a number of trades on this one too. You can see how that 200, it has the swift descent like we were talking about, and it's got this amazing, beautiful base. But any trade in this would have to be a short-term trade. This would not be a long trade for me. A long-term trade, I mean, not yet, because it hasn't demonstrated the new long here. We just got new lows this month. Nope. It can go lower than this now before it goes higher. I would be looking to test 10 and see if it can stay above 10 at this point. Put it on a monthly, it's a lot cleaner. Look how nice that reversal is here. That's a really nice reversal. Come on, quit being janky. There it goes. Really nice reversal on that key level. It turned on a 111, and you can see it really nice on the monthly. This bar is your bar of control. That's the boss. If we close below that, then we're going to go to this other bottom down here, 11, maybe 10. Wasn't Lattice just in the news too? I could have swore Bloomberg was talking about them. Either way, look at that 200. Beautiful curve. Now it's starting to slow down. So, that's a little bit of a concern, but still, it's really beautiful. The AI chart that I was on, if you look at this price action and you're trying to do analysis with it, that big bar is what all the other price is inside of, right? Look at all these candles. They're all inside of that bar. So this is an inside, it's called an inside day, inside week, inside month, inside year. All of this price action is inside of that one bar. So now it's in control. It's the boss. We have to get out of that bar before we do anything else. Yeah, they talk about range, right? Range is a really big deal in the trading world. But I will argue that one bar is a range because this is the fractal that we've all talked about before. It's a monthly bar, but if I open that up, it's 4 weeks. If I open up a weekly bar, it's 5 daily. If I open up a daily bar, it's 35 minutes, right? Like I don't know how many minutes, but you get the idea, right? That we can just keep opening a bar and find another bar and more bars and more bars. So this one single bar is a range all on its own. And since that range, we've done nothing but stay inside of that range. So that is the boss. It runs the show and it is in complete control. Until we leave that range, we got nothing. We don't even have promises that we'll go to the top because we can stall out early and fall back down. We're just crisscrossing right through the middle here. Maybe a little above, maybe a little below. We're just doing that. Now, from an option standpoint, if you're selling options on it, that's fine, right? Because you don't care. But if you was trying to like go long or accumulate a position, you don't want that because you don't know what you're going to get, right? So we got a GTFO, get out of the range. Then we got something to work with. I think if I was looking for a way in, I would start with something less than the monthly, right? Because the monthly just gives us our range, and I would hone in on something like the daily. You could accept, right? Accept that was a monthly bar and it was really wide. If we went in and tried to price the iron condor using 40.45 up here, and then using what 15.10 down here. That's $5 wide on each side. You would very likely find that you're not going to get any credit for it. So then you've made a $5 wide iron condor and you maybe get 40 or 50 cents and you're risking 450 to get it. Is it doable? Yeah, yeah, but is the juice worth the squeeze? And it might be. You know what I mean? Like I didn't look at the options, but see how these out of the money options have no money? There's your answer. You would have to make a narrower iron condor. And depending on the time frame you choose, narrow might get you where you want to go. It might. It's got a $4 expected move for November. We're at 18. That would be 22. So here's 22, and it's $2.50 wide on a $20 stock. Those are really bad options. Of course, it's got some volume though. And then from 18 going the other way is 14. So we would use probably these 15s. That's 60 cents on a $2.50 wide trade. You're risking 190 to make 60. And I mean, you don't get good risk reward on trades like this, right? You're not supposed to. Risking 190 to make 60 is not bad, but you want to try to get like 1/3 the width of the risk. So if the total risk is 250 and we were trying to get half that, then you'd get your calculator, take 250 divided by 3. It's like 80 cents, right? Is that right? 82 cents. So we'd want at least 82 cents in credit. I'm ballparking and I'm not awesome at math, but that'd be about what you want, 80 cents. Hey, 83. Not bad. But there's your iron condor. And if we set those lines out on the chart, there's your iron condor. It says price would need to stay inside of those lines or you lose. Well, that's narrower than what we were focused on. It's only the low end of that candle. That's a nice scoop pattern. All we got to do is resolve that mid price. If we can get above that and actually close above it, it opens 22 and 24. That's a pretty good LRE if you think about it. Get in around this level, and if it closes back below the half, you just close your trade. You get your hand slapped a little bit and you just move on, right? Not a big loss at all. I like it. For me though, I would need a red day, one of these kind of days where it pulls back just a little bit, let me in. I don't want to buy on a call day, on a green day. All right, guys, it is Friday afternoon. Market's closed. Hopefully, we got answers to your guys' topics this week. I'm always looking for new topics though. So if you guys got ideas, hit me with them. Let's go get the weekend started. Yesterday's topic was very much in line with today's. I posted it in the chat. Here, scroll back. It was blue. No, excuse me. It was a black background, green writing image that showed what we were talking about right here. Developing setups with rules and systems. That's what we covered yesterday. Yep. Everybody, be careful. Have a good weekend. I'll see y'all on Monday.